Hello, everyone. So, Oscar and Cypher team, thank you for giving the privilege of participating in Cypher as a keynote speaker. I fully enjoyed the experience. And I really liked the previous presentation. It really made me think on some fundamental areas as we talk about AI and its adoption in the industry. I am here to share with you some perspective and insights as to how the data science or AI or machine learning or whatever is the most apt term is reshaping a very old business model, life insurance. So life insurance has been using data, I think, since past 300 years when the actuarial practice first came. So long before the world knew data science, computers, and anything, this industry had been actually pricing the policies on the basis of the data they collected from the consumers. However, the nature of the industry is such that we have to commit to meeting people's obligations 25 years hence, 30 years hence. So it's really having a long tail. Imagine you are buying your policy and you need the money 20 years, 30 years down the line. So it has to be very robust frameworks. So therefore, regulations were thrown in, and a lot of that defined the way the industry shaped up. So consequently, for a long period of time, the industry was a little bit falling behind in adopting the cutting-edge technologies and the modern scientific approaches, which some other industries, they came from behind and overtook it. So of late, that environment is changing, and we see life insurance globally is rethinking on how to adapt to the next generation way of doing the business. So the elephant is a very apt animal I could think of because like elephant, life insurance is very large. It is perceived to be slow moving, but at the same time, it has got enough resources, and when it starts moving, it really gathers the momentum. Speed into velocity, the velocity is really there. So at the very outset, it's a little bit about how the industry originated, especially in the Indian context. So the life insurance company was first set up in 1818. There's some statistics I took from Google. You can just Google and get more statistics. But to give the perspective here, it was set up in Bombay, and over the next century and a half, more companies came in. When we got independent in 1956, the entire industry was nationalized. And after around 40, 50 years down the line, again, it was privatized. So 2000 was a landmark year. It was a watershed for the life insurance industry. New companies were formed, and as a part of the regulations, government allowed up to 26% foreign direct investment. So there was a lot of agility seen in the sector, which was dominated by one state entity for so long. The next watershed moment came in 2015 when the Insurance Amendment Bill was passed. And this bill passing has accelerated a lot in the way data science can be applied into reshaping the way life insurance companies think. So let us take first a look at how the industry is positioned. Of course, I said it's like the elephant. So think of a country like ours, 130, 140 odd crores, around $2.5 trillion in GDP. So our gross savings rate is over 30%. So these figures I quoted from variously from IMF, PwC, IRDA, the India Brand Equity Foundation, Economic Times. Out of that 32%, 60% is going into household savings. And out of the 60% household savings that goes into real estate, that goes into bank deposit, mutual funds, 19% is the number which comes into life insurance. So if you do the math, the penetration as a percentage of GDP is just over 3.5%. So it's a very large size industry, but if we look at the size of business, so $70 billion of premium we write as an industry in India every year. But there is a lot of opportunity. Today, for a population of 135 crores, the estimates say that 30 crores have some formal policy, and if I take into account the additional policy holders by the Prime Minister's initiative, that will account for 40 odd crores. So some decent estimates say that it should be easily another 30, 40 crores, the opportunity. Looking at another way, the average life cover which an Indian has today is just 3 lakh rupees per annum. Can you imagine 3 lakh rupees? That's when, if something untoward happens to the individual, his family or near and dear ones just gets. If you just remove the effect of the Prime Minister's insurance program, maybe that figure will climb to 4 lakhs, 5 lakhs, but not more than that. So that is the big opportunity what we have in the life insurance sector. So what is some of the emerging trends which are making us think in the industry, and the ability to drive data science comes from this. On the first, I've kept product. So we as customers, we want a simplicity in our products. Let life insurance do what it is meant to do. Protection, annuity, the simple products. We are talking about portability, like the mobile number. Can life insurance be made portable? That if I'm not happy with my provider, I just switch to another one. So again, talks are going on. Distribution. One of the landmark things which has happened in recent years is the distribution getting open architecture. So a lot of the business which private companies we do comes from the banking branches, the bank assurance channels. Until now, it was all captive, so one bank and one insurance, they were like locked. Now with this insurance amendment bill, each bank can tie up to 3 life insurance companies, 3 non-life, and 3 health insurance. Now imagine, that is putting some healthy competition, and who is winning? The consumer. So the way life insurance companies are going to reach out is through digital and other means, and that's where the data science is going to play a role. Again, as the competition increases, what happens? The distributors' commissions, all those things go up, and the profitability squeezes in. On the risk front, the great strides are being made in using external data. I mean, I was tempted to write in the original slide, Aadhaar-based biometric, but by the time my turn came to be on the podium, Supreme Court had passed the judgment, so I've just written the remaining part which is being done today is we are using credit bureau data and exploring other external data. And how are we using it? One of the applications is predictive underwriting. Why do I have to pay the same premium as another Mr. Tom just because both of us a smoker or non-smoker in the same age bracket? What about the other distinctiveness between us? So can I do a further deep dive into the underwriting guidelines and give the benefit to the better quality of the life? So with all these considerations, where it goes is how this management thought translates into the data scientist's world. So management is thinking, I need to create my market share, I need to enhance my market share, I need to control the cost, I need to grow the top line, improve the bottom line. I need to cater to the millennials, I need to have a future-ready business model. What is the data science response to that? When I say data science, I don't mean just a bunch of statistical or machine learning models, but I'm talking about the entire ecosystem, which comprises technology and as well as machine learning models. We are promoting, let's move to the cloud. Let's get more mobility solutions. Let's make it very agile. We're creating smarter segmentations. We are trying to automate the process through robotic process automation. Like Mr. Piyush Chauhan very correctly mentioned, like it's not easy journey to do. We have to train and train and train, but that's what the journey, what we have embarked upon in the industry, taking a cue from the emerging things which are happening in the marketplace. So how does a future-ready business model look like? At the core of it, we define 4 things. We need to have a very nice technology platform because technology is the bedrock. Even before data comes the technology. So we are reaching out to the cloud because the advantage of reaching out to the cloud are manifold, but for a business, frankly, one of the biggest advantages, it converts my CapEx into an OpEx. Yet I keep on upgrading my technology with the best thing available in the town. So Amazon Web Services, Azure, Google, and IBM, there are a host of cloud services available. Next is the enterprise mobility. We have to create the connectors by which we communicate the decision-making process to the very grassroots level. So the data science is not for a boardroom presentation until the time it reaches the salesperson on the street, until it reaches that person who is processing the claim. It will not see the final word on the adoption. The third is a data ecosystem. This is very important. All these are important, but this is very important, unique, because unlike a credit card, unlike a telecom, in life insurance, how many times do we really as policyholders interact with our insurers? If I am in a bank, and I have been in a bank for many, many years, I'll log into my to my account and do something over there. I'll use my credit card or I'll pay the monthly bills. In a life insurance, I'll just pay one premium. So the conventional transaction data doesn't apply in a life insurance. So there are ways to create a little bit around that problem, and I'll talk about one of the slides. Data, and finally, the organizational agility. So what is motivating the organization in driving the data science way of managing life insurance versus what is the mindset? The motivation may be Google I/O, the mindset may be on the street I have to sell a few policies. So there's a marriage between the two if you want to see a successful adoption. So using these four, we are catering to the revenue side, to the risk side, and most importantly, the customer side as well as the internal operations. I'll just go quickly through. So the cloud technology stack, usually the common format, I mean, most of the life insurers, what we use, we are now adopting this cloud technology stack. On the top of it, we are creating what we call data lake. Data lakes are at various stages of evolution in various organizations. If you speak with one organization, they may be really ahead of the curve. The other organization may be just thinking. But the idea is to pull together all the data. So customers, for example, I mentioned that conventional transaction data is not there. But my customer walks into a branch. My customer logs into the website sometimes. They call at the call center. And when I send an email or SMS campaign, they do click on it. So they may not be interacting with me like the way he will be doing in a credit card or telecom or retail, but they are interacting. So the focus is on assimilating all these customer interactions across the touch point and create what is called a customer 360 degree. And this is where data science is playing a role. Whenever I can track an email is coming and I can put a sentiment on top of it, it is a sure shot way to know that whether like the customer is going to renew his policy or lapse. Of course, putting the contextuality is a very, very difficult game, and we are working on towards it. I'm sure across the industry, hardly anyone will be able to say we have come to the end of it. Then, of course, the common tools like R, Python, and all the stuff, and then you put the machine learning libraries, TensorFlow, Keras, as and when the requirement is, and that is like migration. Then the adoption of the enterprise mobility. So on the one hand, that is the beginning of the funnel. The other part is the end of the funnel. So can I create an app when my salesperson goes that I can track where he is going using the geolocation? Has he really reached on time to where his prospect or customer was waiting for an appointment? Does he have an app which will quickly take a look at the different variants of the product? If I, as a customer, I stand in front of the agent and say, okay, for that product, for that variant, what happens if I surrender my policy in the 4th year? Now, one human being cannot remember the entire gamut of knowledge. What I enable this on an app, he quickly looks up and responds. So that's the way he's delivering. Verification. So a very typical situation with life insurance is the people who are maybe having not good health symptoms or maybe on the higher side or asking for a heavy insurance, they're asked to go to the medical center for verification. How do I ensure the same person had visited the medical center? How do I ensure there was no collusion fraud? So what I take a snap of the customer when he's coming with an application. I take a customer snap when he's appearing for the medical test, and I do an image matching. So these are not something fanciful, very simple applications, but they work. Service, again, the same way customers can reach out to service over the app, like send my premium. When is my premium renewal due date? What is the amount? What happens if this, all those things. Emergence of ecosystems. So unlike the banking industry, in life insurance, we did not have a thorough bureau. Of course, we are using the credit bureau because the hypothesis which has been tested true is the individual doesn't discriminate between how he behaves on a life insurance or a mutual fund or banking. It's his overall financial health. So the information which is contained in the credit bureau tells a lot about the person's financial position. So if he has taken a home loan, maybe his payment capacity is constrained temporarily, and he may not be in a position to take a really high ticket size life insurance. This is the example. But beyond those things, like we have these traditional partners, which is like my in-house where the data flows in. Network partners, my distributors. Can I join my distributors together and find that, okay, we'll be sharing data, and this is to recommend the right kind of product, whether your customer needs a term plan or a health plan or an annuity plan. So I use the network partners data. Fintech partners. A lot of fintechs we are seeing they're interested in partnering with us. They have a huge customer base. Their customers interact with them on the app, on the website. And the insurance company gains the data transactions by partnering with those companies. And what do they get? They get the fee income because they want to share the data. And of course, with all the due compliance, all those things thrown in. And I said the organized data partners like a credit bureau. Now, each of them have certain features. Some have full access, some have limited access, some are paid access, some are static, some are dynamic. But what I wanted to cover is the limitation of a traditional data, a conventional transaction pattern has forced us to think beyond what has been prevalent in some of the other industries, and this is how we are attacking this part of the problem. The third part, the final part is the organizational agility. The first important thing is, of course, here it builds in the line of what Piyush Chauhan was telling. But first is, I have to pick the right problem. I cannot read something in a website and next day come to the work and say, hey, Google did that. I want to do that. That may not be feasible for me. So I have to pick the right problem in the first place. So identify the core areas. What is the focus of the company? Is it like incentivizing the sales force? Is it like managing risk in a more precision-driven way? And then we build cohesive teams. So this is the most important way to drive the data adoption. It is not a few data engineers on one side and the data scientists on the other side thrown in, and they will come up with a Houdini magic. You have to get people from the business teams. You have to get people from the variously they are called quality teams or service excellence teams, those kind of teams who just will touch upon the different departments. So build a cohesive team. Get the domain experts, get the technical groups. Remove data silos. Most organizations, we collect a lot of data, but when it comes to analysis, the data is not accessible. So data lake may be giving the technical platform, but do we have built the mindset where we assimilate data from different sources that it can be readily available on recall? So that's removing the data silos. This is how so far we covered like, what is the life insurance industry looking like? How does it translate into how we reshape our thinking process in data science community? And finally, I'm going to leave a few thoughts on how predictive analytics and machine learning are actually helping some of the businesses we talk about. First is the sales part. When a customer comes, it's very difficult to understand whether I should pitch him a more profitable product for the company or a profitable product for the customer. Of course, there's a product mix like any traditional business model which goes on. But a product recommendation engine can help pitch the right product to the right customer with the right premium size. So your right plan is health, and this is your recommended premium size. Of course, the customer has the option to not choose anything of that one, but that's a helping hand to the sales force, what we can provide. Hyper-personalization of sales incentives. So for the sales force, the biggest motivator, of course, like most of us, all the rest of us, is the money, and it's paid as incentives. How can I nudge the sales force to complete the various tasks associated with his process, like meeting the customer, making him fill up the form completely, submitting the form to the hub center on time and do the different part of the journey, I can break up his incentive and tag it to each of these tasks. And the optimization comes in here. I run my recommendation engine about what is the right product for the customer, and similarly, I run another association rules which FLS frontline sales is most suited to sell a term plan. The moment I get a match, this customer needs a term plan, and this FLS or frontline sales is available for a term plan selling. Now match the two. That is the most successful recipe for a sure shot sales conversion. Converting insurance sales is very, very difficult because there is no natural pool of the product. We don't say, hey, I bought an insurance policy. How many of us have written in the Facebook, I today paid my premium? No one, right? So the next is on the risk side. I talked about predictive underwriting. So again, the task has been to influence the actuarial community because for one, it's a regulated industry. For two, there is a reason for the regulation implications. So I can't just run an algorithm suddenly and say, hey, you decide based on this one, because that will impact the cash flow severely. So a thorough discussion and agreement with the actuaries, with the reinsurance companies. Reinsurance companies are the companies who are like insuring the insurance companies themselves. So all these stakeholders must agree, and then it will be the right adoption of a predictive underwriting framework. Fraud alert. Seemingly the customer is looking fine, hale and hearty, he has paid his premium on time, but what we are saying is that he is suddenly coming up with a fraudulent claim. Now, can data analytics, predictive analytics predict who is the customer who is likely to land up with a fraudulent claim, although he is making the payments renewals on time? Some of the customer engagements are like providing the nudge to the customers who needs to renew, what to cross-sell, and claims investigation and payout recycles. So, and finally, some of the things which are right now ongoing in the industry at various companies are like NLP based chatbots. So the big challenge here in creating the chatbots are bringing in the contextuality. So supposing if I say, like some of the example with the Indigo I saw in the previous slide, the classical case is the customer writes, I was thinking of surrendering my policy, but now I want to renew it. Now if you do a keyword search, the same sentence has got surrender, it has got a word renew. How does the chatbot build this intelligence? That's the task before us, to make it really smarter and intelligent. Face matching, I gave the example of the medical fraud. Digital funnel optimization. Life insurance policies require that you disclose as much as yourself. So when you make the digital journey in the sales part of the funnel, there is a lot of dropouts which happen. Customers do not fill up the form completely and they drop out. How do we arrest that part of the journey? And finally, this is the toughest one, the voice-based sentiment analysis. How can I know what is the customer's sentiment as the discussion is going on? Because the conventional call center metrics, they will say the average handling time, how many calls the telecaller has been able to take in a day. But whether the customer was screening for 10 minutes or whether the customer was satisfied for 10 minutes, that aspect is not captured in the traditional business dashboards, basically. So how do I capture the sentiment analysis? It's a very, very difficult challenge. The challenge is, in India, what we see, 80% of the customers, they speak English. Now, you cannot readily translate a Google API because that's built in the English language. How do you create address for this English? That's one of the big challenges. Of course, the other parts which are relatively easier, determining the gender of the individual things, but that's in short like what are the different areas in which life insurance industry is using machine learning and data science. So this is just a slide for food for thought. Today we are talking about data science. We had a very primitive cycle. We had a telephone. We had a gramophone. Where is all this leading to us? So I hope as we work in this discipline and we keep on coming back to Cypher again and again, and over a period of 10 years, we'll discover like which way the adoption is going. Every new thing has its limitations, and of course there will be course corrections, but hopefully it will make our life easier and profitable and better, not to scare us away. So thank you very much.